Hello traders out there in Traderland, my name's D7 here at Grok Trade. This is the weekend edition video, good through Monday, July 20th, 2020. And we had a wonderful week so far. This is earnings season. We have a lot of earnings coming out. A lot of the big banks, earnings. Make sure the rule of thumb is never hold over earnings. Okay, let's get into the markets. We're looking at the SPDR. SPDR is the ETF on the S&P 500, the most important index out there. The SPDR also gives us volume. Because of that, it gives us a good indication of what's happening in the markets as a whole. Anyway, we had this big symmetrical triangle the last few days. Wednesday, Thursday, Friday, we popped up above a trend line. That's really bullish. I like that a lot on the bull side. We're above all major moving averages. That's looking pretty good. The Dow 30, only 30 stocks. This is more price weighted index, not performance weighted like all the other indices. So this one's a little different, but it does track a lot on the S&P 500 as a rule. I'm getting geeky on you, it doesn't matter. Here's the deal. Big symmetrical triangle. We're still caught up in the apex. Look for a breakup or a breakdown. We're above moving averages, and the price action is staying on the upper side of the apex. You see that the last few days on the upper side. So we have a couple of things that are more bullish than bearish. Because of that, I think the odds of this popping higher is better than going lower, but anything obviously can happen. NASDAQ, we're in an uptrend going up, higher swing highs, higher swing highs, higher swing lows. Higher swing lows. We're pulling back to a support area. We have a lot of upside opportunity going up. However, when the S&P and Dow is going higher the last few days, we've been lower the last few days on tech stocks. The Russell's 2000. You see these two lines that we had this big bullish pennant I talked about? Well, it broke out. That happened on, that'd be Tuesday. Tuesday, it broke the trend line. Wednesday, we popped up. Thursday, Friday, going sideways on the Russell's 2000. These are small caps. Now we are above all major moving averages, including the big red one. We call that big red. That's the 200-day simple moving average coming across. We're above that. So pretty strong, pretty bullish there. We have a trend line that we will contend with. We need to get over that trend line. Financials, though, a little laggy. Big symmetrical triangle. Instead of being in the apex or above the apex like the other indices, financials are lagging below the apex. This trend line, the lower trend line that it broke below, is now acting as resistance. We need to break above these two trend lines for us to go bullish in the markets. If the financials, if the banks show weakness with earnings, expect this sector, expect this ETF to start to break down. If so, the rest of the markets will follow. Watch that part of the video twice. Don't miss what I just said. Very important that you understand that the strength of the markets are only as strong as the financials there to support it. Okay, pause the video, rewind, listen to it again. It'll help you. US dollar is in a huge symmetrical triangle and very much in the apex, threatening to go down. If the US dollar goes down, that will be better for stocks, better for commodities, better overall. But the dollar has been taking a beating since March. Since March, we've been just crashing and lower. Silver, up and away. Nice and bullish. We broke through. Well, look at this. Another pennant. Do you see how we went up? I said, look at the bullish pennant. It broke out of the pennant on June 30th and then has gone up ever since. We're building kind of a base pennant type formation up here, catching its breath at $18. Look for more upside. Gold. Big rising wedge. Don't like that on the big. That's more bearish than is bullish, but we do have a nice bull pullback. Usually we bounce off of support levels. When we hit support, we bounce. We hit support, we bounce. We hit support, we bounce. We're at support. We should bounce higher. Look for upside opportunity, but woe to this market if it breaks below the trend line. If you don't know how to draw trend lines properly, We do have a course at groktrade.com on trend lines. It's really, really good course. You want to take that. But if it breaks below that, we're in trouble. If you don't have the trend lines locked down, 20-day simple moving average. If it goes below that, gold. If gold goes below the 20-day, oh, that's in trouble. VIX, this is the fear indicator. It's been going down, down, down. Big symmetrical triangle. We broke down below the symmetrical triangle. We're below all major moving averages, which is really good. So right now we are at 25.7. So we are dropping here. We are dropping. And furthermore, Bitcoin big bull flag. We popped up above it, but the area is acting as resistance. This trend line is now acting as support. We're caught up in the moving averages. Whole lot of nothing since May. Just choppy sideways going, nothing. But some interesting things happening with Twitter and Bitcoin. Do your own research on that. Quickly. Let's take a look at Apple, see what's going on there. As long as it stays above this trend line, all is well with Apple. Anytime it gets near the trend line, look for purchases. And as long as it stays above it, if we go below that trend line, you'll want to be taking profits, I think. But here's the deal: we have earnings coming out. It looks like July 30th. This is TradingView. There's a link down in the description on the charts I'm using. Never lean on this. These earning dates can change from day to day, but the rule of thumb is it's a gamble to hold over earnings. You don't want to hold over earnings, but know when those earnings are coming, and it's great to be flat that stock, meaning you've sold it before it happens, because you don't know if it's going to explode higher or lower. It's a gamble. If you're willing to gamble, you're in the wrong business. You're in the wrong business. So let me just say this. Monologue time. And soapbox time, apparently. You're in the wrong business if you're gambling in the markets. If you're willing to take a 50-50 gamble, you are a gambler. Gamblers, we victimize in the markets. Let me tell you how we victimize you. Because what we're doing on the professional level is following a very strict system. We take a trade setup that is chocked full of rule sets that increase our probabilities at every step, at every angle. Those rules that we follow, those trade setups that we have, are second to none. And what we do is we trade with the probabilities in our corner. 50-50 is not an edge. 50-50 is not probability stacked in your corner. 50-50 is gambling. If you're going to do 50-50, you're dead already. Let's say you do 50-50 and you throw darts for the rest of your life at the markets, and you win one, you lose one. With just expenses that are associated with your trades, you will lose money. There's no other option. There's no other variable. That is a fact. Your win ratio has to be above 50%. People can get lucky at the blackjack table. They can, but the odds are stacked against people at the blackjack table. The vast majority of the people that sit down at a blackjack table lose money. Look at trading almost like the craps table. It's the flow of money coming in and out. Only those that can pinpoint and have a method in place win. So listen, holding over earnings is an amateur move. Holding over splits, amateur move. There are so many amateur moves out there. And yet you do them, and yet you struggle, and yet you have problems, and yet you bang your head against a brick wall, and yet you kick your dog, and yet you yell at your spouse. Okay, I'm being facetious there. But I'll say this, just quit. Man, I can't believe I'm getting ready to say what I'm getting ready to say. Quit trading. It's an expensive hobby. Quit trading. It's an expensive hobby. If you are willing to quit being a gambler and be in the house. If you're willing to do that, if you're willing to learn systems, if you're willing to learn techniques, if you're willing to learn those things, that's one step. It's funny how we can teach 10 people a winning strategy and 8 of them will find a way to lose money at it. You know why? And let me give it to you. Discipline. If you don't have discipline, that means you will never follow the rules. If you don't have discipline, you won't even get down the path long enough to put solid rule sets in place. If you don't have discipline, you'll never put together a trade plan. That's the last thing on your plate that you want to do, because you like the endorphin shot. You like that shot of adrenaline with the gambling. If you're a gambler, thank you for patting our pockets. We say that, but I'll tell you, I'd rather take monies from the institutions and not retail investors, you guys. That would do my heart better, knowing that I'm out there victimizing hedge funds, institutions, insurance companies, all those who are in the live markets, VCs. But listen, if you are being victimized, stop trading. And here's the other thing, discipline. Discipline, you won't have a trading plan. Discipline, you won't have the rules in place. Discipline, you'll just, without discipline, you're just dead in the water. Trading is not for you. Trading is not for you. You have to be highly disciplined. Highly disciplined. So much so, what I'm getting ready to say will blow you away, okay? So much discipline that that trading becomes boring. Because trading, you're doing the same thing over and over again. You're finding the patterns, you know where you set your entries, you know where you're setting your stop loss, how to manage your stop losses. You do that over and 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 over again and over again. It's just like at first you got this machine, it cranks out Benjamins, $100 bills. It's a machine, it's a magic machine, it's awesome, and you get cranking that magic machine, and you, at the beginning, man, you can't crank hard enough, man. You got bins just flying out. But the next day, you might slow down a little bit. Next week from now, you're like, whoo, this is fun, man. Look at this, I got a stack. A month later, you're like, man, my arm's getting tired. My arm is getting tired. And then your attention goes to your arm getting tired, not the Benjamin. and then you just kind of like, whoa, because when your trading gets boring after a while. After a while, you're just cranking a box. So that's where you need to be. You need to be there. Discipline says you'll stay at the box. Discipline says you'll keep cranking. Discipline to do that. Undisciplined person, nope. You're going to be looking for new things, new indicators, new oscillators, new things to excite you, new strategies or techniques, and you're going to be testing yourself into the grave. That's what you'll do. How do I know that? Been trading 22 years in the live markets. Been teaching over 14 years. I just know that to be factual. I run one of the nation's largest trading groups, 500 strong. So do I know what I'm talking about? Maybe not. But there is another thing that separates those who do really well in the markets and those who do not. It's not just discipline. Discipline goes a long way. Let's make the assumption everyone has the requisite education and training, okay? With that aside, if you don't have discipline, you're still dead in the water. But number 2 is this. Emotions. Have you heard of that? Fear and greed. Most of us have heard of that. If you haven't, fear and greed causes us to make bad decisions in the markets that are illogical, and that hurts our probabilities as a trader in the market. So fear and greed. We get greedy, we have our heads handed to us. Fear comes in, we stop trading. We become dead in the markets. I could give you several examples on what that is, but I don't want to take the time to do that. But the greed is, well, both. Fear and greed hurts us. Actually, fear is more prominent than greed as investors, because most people are losing money because they're losing fear becomes predominant. But a lot of times, one of the worst things that can happen to a trader is they get into the markets and have early success. That's what happened to me. If that happened to you, let me know in the comments. Early success will kill a trader because it brings an unfounded, unverified, and it brings a confidence to us that we should not have. You know, if you're trading, it's like, whoa, this trading stuff's easy. If that has happened to you, like that Portnoy guy, okay, Davey, the day trader, whatever his name is, he had early success. I'm telling you, just mark my words, he will bleed out of his account. He is doomed without the requisite trading education. I offered him our education in exchange for him promoting us. So I was just going to change it. No money out of his pocket, and never heard from him or his agent. That's fine. I'm just saying, if he doesn't have the requisite trading education, this early success he has, that's gave, with Shopify and Snap and some others. I think Shopify. It was just Shopify he was making some money on, and something else. I can't recall what it was. But anyway, mark my words. He's trading millions of dollars right now, and he will take a brutal beating. And the news will come out, Portnoy lost all of his money. It will happen. Just remember this video, and you'll say, whoo, called it. This is the second time I actually said this, publicly on the video. But anyway, my point in all that is this. If you have the right mannerism, if you cannot be moved emotionally in the markets, you're stone cold on your trading and your discipline, holy smokes, you've got the makeup that is needed to kill it in the markets. Woo! You do. So I'm going golfing today. I'm going to get out of here, matter of fact. And it's second time I've golfed. No, have I golfed? I think it's the second time I've golfed this year. Was it last fall? I can't remember. Haven't been golfing. I'm taking the Series 65. Why? I have a super duper cool trading algorithm. My trading bot is actually making 57.33% per year. Warren Buffett does 21 to 25% per year. My trading algorithm is beating him by 2 times. I'm beating Warren Buffett by 2 times. What? My trading algo has been backtested 7.5 years and is averages 57.33% per year. Anyway, I can help accredited investors. If you're an accredited investor, feel free to reach me at DES, DES, Delta Echo State, at groktrade.com. So feel free to reach me if you want to be on a short list to be updated on the algorithm and to get more information on what it is we're doing. I won't be ready to do this until like 2021 because I got a lot of training to go through. It's insane, this Series 65, but I'm learning all sorts of useless stuff that doesn't help me in my trading. Buy and hold, cost averaging, buying mutual funds, gag me with a chainsaw. Anyway, but my algorithm's killing it. I'm up actually almost 16% this month. I'm trading it live money in the markets for the last month, up 15% in 1 month. My algorithm is doing 4.8% per month. They come up with the 57% per month or a year. So let me slow down. My algorithm is almost at 5% per month. Okay, back tested. Almost 57.33% per year. Okay, 5% a month. I have been trading the algorithm with my own money 1 month. I'm up almost 16%. The last I looked was 15.7% is what I'm up in my live account. Not back tested. Pretty cool. So I'm geeking out. A lot going on. I can't believe you're still listening. Can't believe you guys stayed this long. Because when I go and look at the metrics, it's like they're listening all the way to the end. leave it in the comments if you've made it to the end. Really appreciate you guys. Rock and roll. So that is it. There is the bull and bear list. I'm shaking it because this is for the Stock Picks V newsletter. That is the bull and bear list stock picks on our Stock Picks V newsletter at Grok Trade. And I just posted that video for all the subscribers. We got some great setups on both sides, bull and the bear side. So we have a bull list and a bear list. I think those will be of interest to you guys. Take care until next time. We'll see you later. Bye.